So now you can draw your Fibonacci across, and then so take out the bring out the let me bring out my 50 and 61.8. So now if the so you could see that it was inside the 50% and 61% point eight Fibonacci level. Let me firstly take this out so that I'll be able to explain it. Okay. All right, so this was what we have here. So price got into the Fibonacci zone, as you can see. So price got into the zone. And so just because price goes into the zone does not mean that you're going to be going into the trade. So you still need a key level to support the move. So now it's time to look left and see if there was a key level that will match it. So what you just have to do is you can just draw, like I usually say, just draw a horizontal line to find that particular level that will be in line with it. So we have like several levels here. You can see. So if I want to start the key levels drawing from here, I could just start from this area here, because I always want price to like touch a level multiple times. So that's why I usually like look to the left. So I can just like start from here. We have some Fibonacci, we have some key, like some touches here. So I can just start from here, like drawing the key level from here. But I like for price to touch a level like multiple times, because that gives me like enough confidence about that level that okay, this level will hold, because I know that price touch it a lot of time. So that's the reason why I usually like move, like go to the left and check what is currently happening in the market. Now, what we have here, so we have rejection of this level here. We have this level acting as support. Now, price now got into this level. You could see price got inside the Fibonacci zone, got into this level. So that's when you can now got into a trade. So it's advisable to got into a trade here. So it's very much safe to got into a trade here. So you are just continue continue the bullish movement. So since the market was like bullish, like the market direction was bullish, so you got into a buy trade here was still very much valid. Okay, so just like I said, this trade was very much valid. Yeah, so it's very much okay. Now let's look at another trade. So your Fibonacci drawing, like how you draw your Fibonacci will be like the time frame you are using will determine how you will draw your Fibonacci. Like the particular time frame that you are using will determine how you draw your Fibonacci. Now let's look at this. So we have a bullish move here. You could see how price was pushing to the upside. Now if we are so currently I'm on a 3 month time frame, so you can still like use the 1 month time frame, like the monthly time frame. So but I'm currently on the 3 month time frame. Now if I want to draw the Fibonacci, I will start from this low, drag it to the upside like this, put it to this candlestick wick. And also another thing is that if you are starting the Fibonacci drawing, you start the Fibonacci drawing from a candlestick wick, not from the candlestick body, not like this. So you start with the from the candlestick wick and then put it to the candlestick wick. So you start from a candlestick wick and end it at a candlestick wick. So that's how you draw a Fibonacci. You start from in an option like this, you start from a low, like from a higher low. Start from a higher low, put it to the recent higher high, and then wait for price to retrace back into it before you start looking for buying opportunity. And so what I'm saying is that so you start the Fibonacci drawing from the candlestick wick and put it at the top of the candlestick wick. So that's how you draw the Fibonacci. And also I said how you draw the Fibonacci depends on the time frame that you have. So if you are drawing the Fibonacci on the monthly time frame, it's going to be different from how you draw it on the weekly time frames. Like how you draw it is the same thing, but like where you start the drawing from and where you put it, that's just like what I'm saying. So because every time frame have their market structure, looking at this on the 3 months time frame, all this bullish move that we have here, it might be like some maybe price creating series of higher highs and higher low moving to the upside. So how you draw the Fibonacci will be different if you are on maybe on the daily time frame or on the weekly time frame. So that's just like what I'm saying. Now price got into the Fibonacci zone, and also we have a zone here. So price continue heading higher, but the example that I want to use is just like this particular one. So if I go down to the monthly time frame, so and that was like how I was able to got into this trade. So even and one thing about like the Fibonacci, after you draw your key level, so the Fibonacci is not like something that maybe after price got into that Fibonacci zone, after price have already got into that zone, that's when you are going to start drawing it. You can start the Fibonacci even when price was still like trading around this level. So my Fibonacci when I draw this, when I when I was analyzing this market, so let me check if I could like no like, okay. So when I drew the Fibonacci from here, price have just like create this first red candlestick. So we never have the second candlestick, and price have not even gotten into this blue zone. So price was just retracing back to the downside. But I know that we have a bullish movement here back to the upside. We have price creating a higher high. So obviously we are going to be expecting a higher low. So one thing about the market is that you have to know that the market does not move in a linear way. So the market move in a wave. So the market does not like just move in a straight line. So if you see a market that price was just like moving to the upside without any retracement, so whenever we are going to be having the retracement is going to be very much bigger because price have just been moving to the upside significantly. We never had any major retracement here. So I know that when price was forming this particular red candlestick, this first red candlestick, I know that price will definitely go into this zone because I already draw my key level out, like my support and resistance level. I already draw it out. Now, I know that there was a high chance of price getting here. Now, what I just did on this trade is that I just bring up my Fibonacci just like this, start from this low, drag it to the high. This was the high that caused this downward movement in price. So when I see that okay, price was just like tracing back to the downside, and this my key level matches with the 50% Fibonacci level. So I know that price will definitely respect this level because it was in line with the key level and also with the Fibonacci level. So even without a trend line, you can say I got into this particular trade, but we did have a trend line intersecting at this area as well. So how I draw this level is just like how I draw this level is just so I think now I can see that price was got injected from here. So what we have here should be price got injected with the candlestick body. But this was the stock market. So the way the stock market moves, like the candlestick, how they move is quite different from how like the forex market. So the analysis is the same, but how the candlestick move, how the price create the candlesticks sometimes is quite different. So you can't really like it's not going to be that perfect like the forest market candlestick. So, but I know that price was got injected from here. So this was obviously a rejection from here. So on the weekly time frame, this was a rejection from here. Price got rejected to the downside. And after that, price break above it. I know just like I usually said, whenever price broke a level, always wait for a retest. Like if price broke, so this was obviously a resistant level. Now price got rejected to the downside, price break above it. So like I usually said, if price broke above maybe a resistance level like this and then start trading below it, you don't sell after price start trading below it. Yeah, most of the time price might continue moving back to your like price might continue moving to the downside in your favor. So if you sell from here, obviously you'll be making money as price was moving to the downside. But you need to wait for a retest to confirm that this break is now valid because price can like price can just as price was trading below here, you might go into a sell trade after this red candlestick got created. So you might got into a trade after price create this particular red candlestick. So after price create this candlestick, so we might got into a sell trade and the market may just still continue moving back to the upside again. So that's why it's very important to always wait for a retest. So to go, let's say you want to go into this type of setup, just wait for price to retest here. After price retest it here, form a red candlestick on the 4 hour time frame. So that's when you got into a sell trade. So that's just like the psychology behind how I draw this level. So if you look at it another way, you might say that okay, this was how the key level was supposed to be because this was how price got rejected from. Well, I know that price already got rejected from here, break above it, start trading below it, and we have a retest again. So this key level here was much more stronger, drawing it this way down, drawing it at the top here. So that's just like the how I draw this key level here. So I know for a fact that if price got into this zone and also into this Fibonacci zone, price will definitely respect it. Even at the time, I did not notice this trend line. So I think I noticed this trend line when I'm about to go into the trade because I already draw my Fibonacci as price was dropping back to that. So I think around this level here or around this level. So I've already draw my Fibonacci level and also draw my key level, expecting price to go here and then start looking for buying opportunity. So I think after price got here, that's when I discovered that okay, we still have a trend line here. So we have a trend line, we have a Fibonacci intersecting at this area. So that's how I was able to get into the trade. And just like I said the other time, how you draw your Fibonacci will be different based on the time frame, like the market structure. So in terms of the market structure, it will be different based on the time frame. So now if we read this market structure, we have a higher high, we have a higher low, we have a higher high, we have a higher low, higher high, higher low, higher high, and what we have a higher low, and then price push back to the upside. So this was a very perfect example of a bullish market. You could see how this market formed the series of higher highs and higher low. So since this was our last higher low here, so we start the Fibonacci drawing from here. You know, when we are talking about it on the monthly time frame, I start my Fibonacci drawing starting from this bottom here on the monthly. But now that I'm on the weekly, if I now want to draw my Fibonacci, I'll be starting from here because this was the last like higher low before price push back to the upside, and we start having the retracement. Now, if I want to draw my Fibonacci, I will start from this, like from this last higher low, drag it to the top that caused the retracement. So obviously, this was where price go to and then start moving back to the downside. So I will start from there. And so let me just take the 50 out and this is 1.8 because I don't need it for now. Okay, good. Now, drawing it from the bottom here, it was in line with the 50% Fibonacci level, like drawing it from the monthly time frame. So that's the monthly Fibonacci level, and it was still perfect. The other one that was in line with this key level, with the 50% Fibonacci level, it was the monthly Fibonacci level. But this was like the Fibonacci level on the weekly time frame. So based on the market structure that we have here, and even if I go down to the daily time frame, so it's still going to be here. If I still go down to the daily time frame, so that's why it's just like okay to stay on the weekly. Now we have this. We started drawing from here, drag it to the top, and this was in line with the 70.6 Fibonacci level, which was the last line of defense of the Fibonacci. So if price go here and price like break lower, so price might still continue heading higher, but we are not going to be using the weekly Fibonacci anymore. If price broke the 17.6, we are just going to be using the monthly Fibonacci level. So that's how it's going to be. But now that price got into the zone, got into a support, and also got into a trend, I know that price will definitely move higher. And just because price got into the zone, I did not just got into a buy trade just because price, I know that okay, price got into my trend line for the third touch. So this was the third touch of this particular trend line. So we have the first touch here, we have the second touch here. So this was obviously the third touch, but just because we have the third touch of the trend line, I did not just got into a trade. I still wait. So we already have everything that I need in place to get into this trade. Honestly, if I want to get into this trade without using a counter trend line, so it's very much safe because we have the K level, we have the trend line, we have the Fibonacci. So this setup was a very high probability setup, but I still use a counter trend line to go into this trade to be sure that price have taken out all the obstacles that will stop price from heading higher. So I still wait for price to break this particular counter trend line. So I want price break it to the upside. So that's when I got into the trade and I target this key level, particular key level. So I know that this was the key level here. So as soon as price just go here, so
Sorry,
that's when,
sir. I
yeah,
have a question, sir.
go ahead.
Well, this trade had sold and it started buying. Why did you not enter the trade? But how were you sure that it was going to come back down again?
Okay, so what we have here, you are saying that you are going to buy from here as price was pushing to the upside, right? From this zone. Is that not what you are saying?
Yes, sir.
Okay, very good. Now,
Yes,
like
yes,
I
that's what
usually
I'm saying.
say. So the reason why I did not got into this trade yet at the time was that so this was how my counter trend line was. So the reason why I did not got into this trade at the time was because of what we have here. If you notice, price break below this key level, start trading above it. And what I usually say is that whenever price broke a level, like price broke a level to the downside, always wait for a break and the test of that level again before you start buying. So I got into a buy trade, I think around this zone. So the level was like a little bit okay. So yeah, this was how the level was at the time. Now price broke below this level.
Okay,
Yeah, exactly.
okay.
So when price now start trading above it, I now wait for that retest. So that retest was actually what I was waiting for. And I know that if I got the retest and then I possibly get that counter trend line break after I got in this retest. So that's why I wait for that counter trend line to break. So after I got in this retest, so I just like when price broke the counter trend line, that's just like how I got the buy opportunity. So you could see that it's very like so with this like price breaking below here and me waiting for a break and test of this level still hard to the like let me just like to the quality of this trade. So it's how it still gives me like enough confidence, enough confirmation to got into this trade, like enough reason for me to got into this trade because price break it to the downside. So even when price was breaking to this level to the downside, I was saying, okay, that was the time when I discovered that we have a trend line here because at the time I was just using this key level and the Fibonacci, the 50 Fibonacci, which I draw on the monthly time frame. So I was using that 50% Fibonacci and this key level. But when price continued dropping, I was like, price have gotten into like the level where I wanted it and price still continued dropping. So that's when like I just like reanalyzed the chart and I found out that we have a trend line here. So after the trend line, I now see that okay, if price will continue heading lower. So if price wants to continue heading lower, price might continue heading lower, but or price can just like continue trading above it. And just like I usually said, if price starts trading above a level, you wait for a retest and then you buy back to the upside. Now, what's so but in another day, I'll be talking about like how to be placing your stop loss because on this trade I almost got stop out, but because my stop loss was not very tight, so that's why I was able to like take this trade and this trade was able to like be a profitable one. If I had tightened my stop loss, so this trade I would have already got stop out on it because I got into a buy trade. So it's like this. Now let's go to the 4 hour. So I got into a buy trade just now. Price broke this level, start trading above it. When price start trading above it, that's when we have the trend line. So we have a retest and price break it. Now when this 4 hour candle break, so I remember I was in a school at the time. So when price break above this trend line, like this 4 hour break and then this 4 hour candlestick, when it break above, that's when I got into the trade. But as soon as I got into the trade, as you can see, price just continue moving against me. So price just continue dropping back to the downside. So I got into the trade around this level. So I've been monitoring this 4 hour candlestick to close above this counter trend line at the time. So when the candlestick just closed above it, so that's when I got into the trade. But what saved me is that I put my stop loss below this level here. This was the last low here. So if you are placing your stop loss or you are placing your if you are placing your stop loss, then let's not talk about the take profit yet. So if you are placing your stop loss, so if you are buying, you should put your stop loss below like the last low that price created at that point. So if I want to tighten my stop loss, I might just like put it here saying that this was the last low at this point. So it will be like this, but price will stop me out and then continue moving in my favor. So just because I did not tighten my stop loss, so I give it enough space like this. So I put it below this key level here, below this low where price like find support from here. So I put it below it. That's why I was able to like hold this trade and it's ended up being a profitable one. If not, I would have already got stop out around this level. So that's just like how I was able to got into this trade, like using the Fibonacci trend line, also the break and the test. So using break and the test is very important. And also you should know how to place your stop loss and take profit. But I'm not really talking about that today. So if I want to talk about the stop loss placement, maybe it will be starting from next week. So how to place your stop loss and take profits because most of the time you will got into a trade like a trade that was supposed like it may be a very good setup, but that particular trade will stop you out first. Like it will take you out in a loss before moving your direction, like where you wanted it to move. So most of the time it's always happen. So that's why you should know like how to place your stop loss and take profit. But I'll be talking about all that next week. So we are just talking about the Fibonacci and how to use it like for this week. So next week we are going to be talking about the stop loss placement and how so I'll be like doing like some real example on the charts on that, how to place my stop loss and how I personally place my stop loss. So I'll be talking about that. So that I'm just like saying how I was able to get into this trade using the Fibonacci and also using all this trend line and also the break and retest. So that's just like what we have on this particular trade.